Regulated crypto markets and unregulated crypto markets. Which ones to use? We'll discuss this with Andrea Unger, the only four-time world trading champion. Welcome back. Today we're going to be talking about cryptocurrencies. Cryptocurrencies represent a major trend and innovation, leading central banks to also work on their own digital currencies. We're talking about a highly engaging technology and an investment category in which we're wondering how much and in which manner we should invest. When we talk about crypto, perhaps not everyone has a clear idea of the financial structure behind the sector. Too many people think that it's an investment instrument identical to all the others. I'd like to share with you a recent statement by Fabio Panetta, a member of the executive board of the European Central Bank, who said, "Crypto assets don't just represent a high-risk speculative investment. They even pose a genuine threat to financial stability. So, we must take action to bring crypto assets back into a clear regulatory framework that today is still missing." So, this appears to be an outright attack, if we can call it that, towards the 10,000 crypto assets currently in circulation and have a total value of $1.3 trillion. But they lack fundamentals. They're frequently used for illicit purposes, have high volatility in terms of price, and in many cases, Panetta said, are subject to embezzlement. So we need to clarify what kind of market we're talking about, and especially today, we're talking about crypto trading. And obviously, we're going to be doing that with Andrea Unger, the only one to have won the World Trading Championship 4 times in the futures category. Andrea, welcome back.
Hello, Deborah. Good morning, everyone.
So the purpose of our webinar is to explain to our audience that cryptos allow for diversification, but we need to be very clear about some aspects. At this moment, moreover, crypto has captured the attention of investors who were previously interested in other markets, such as, for example, Forex. Today, they're shifting towards this world. Andrea, I would like to ask you to help us better understand the difference between Bitcoin and its derivative instruments. Maybe you could also give us a hint about futures that are present on unregulated exchanges. Because as we move forward and, as we get into these increasingly technical aspects, we realize more and more that cryptocurrency isn't the right investment for everyone, unless you have studied it for several months before investing.
Yeah, and in which months it will still change because it's constantly evolving. However, yes, there are different markets. There is the crypto spot market, the cash, let's say the real currency, and this is traded on the various exchanges that we know. There's Binance, Kraken, Coinbase, and the list goes on. Also, some of these exchanges offer derivatives related to the currency, just like there are derivatives on so many other things. There are the gold futures, there are crude oil futures, gasoline futures, wheat futures, and there is also a Bitcoin future. And in addition to that, some exchanges also offer options. So derivative instruments that most probably amplify the movements of the underlying assets while allowing for a much smaller exposure in terms of investment. They then are also leveraged. So these exchanges, they offer a whole range of instruments that are related to the performance of the main currency. However, unfortunately, and I say unfortunately as a trader, today most of these instruments are not accessible in some countries. And this is due to a regulation that was introduced that prevents, for example, Binance from offering futures to investors from certain countries. Now, this measure was taken based on the idea that Binance wasn't yet aligned with all the regulations. So to basically protect the investors, maybe that'll change. We'll have to wait and see. Now, I also say unfortunately because the Binance exchange offers an interface with the trading platform that I use, which is MultiCharts. And so if there were still futures available, I could directly trade futures automatically, as I do with all the other instruments that I use. Today, I can only do that on the cash market, the traditional spot. And this is perfectly fine. However, obviously I can only be a buyer and not a seller for several reasons. And in addition, there is also the regulated market that has started offering instruments based on crypto. In fact, the CME offers a very limited range of regulated products that track the performance of Bitcoin and Ethereum. So they are actual futures. I mean, just as there are futures of the mini SP 500 and whatever we want, we have Bitcoin futures. The difference between these CME futures and the futures that are offered by Binance, FTX or whatever, is that the former are regulated by the CME and are quoted in US dollars. So they are traded on a market where theoretically we are more protected compared to the unknown and at times even mysterious crypto market. And these futures also have different trends, because the derivatives offered by crypto exchanges are very varied. Some are quoted in USDT, which is tied to the US dollar, whereas some are even paid in crypto and so on. So there is this whole range of instruments that you should know about if you want to do anything in that area. And in this case, we're talking about an unregulated market, while the CME, on the other hand, offers regulated instruments. So to sum up, we have the major currency, the cash market, the crypto, currency derivatives that are offered by the crypto exchanges, and currency derivatives, a few, that are offered by the CME's regulated market.
Andrea, if we were to come to a conclusion concerning this reasoning and outline the explanation that you've just given us, what would you say about when and how to use spot, futures, and which exchanges to trade on? What Unger does. Also keeping in mind my Radio 24 audience hasn't reached this level of technicality yet. There's a great curiosity about crypto, but I'm sure if they listen to your explanation concerning the complications around investing in this world, maybe they would think a little bit more before venturing without a parachute into investing in crypto assets. So, when and how should we use spot, futures, on which exchanges, and what does Unger do?
Well, I hope that somebody will save their portfolio by listening to us, because danger often comes when we expose ourselves to something bigger than ourselves. As for the CME futures, the regulated ones, I would tend to advise against trading them today. If the CME people hear me, they'll tell me to go to hell. But indeed, as I've said on other occasions, they are just too expensive in terms of margins, and they have excessive spreads that don't allow for good tradability, in my opinion. So those who necessarily want to trade cryptos but want to stay regulated should forget it, because those futures are not suitable, in my opinion. The futures of crypto exchanges, on the other hand, well, they can definitely be used. But this leads to an important question. And I doubt that anyone approaching the crypto world buys a crypto future to magnify the impact of its movement. Whoever wants to win the lottery with cryptos buys cryptos that he believes in and then holds it until he can't hold it anymore. So he doesn't go directly to futures. And those who want to go into futures or other instruments do so because they are either traders and want to trade, or they want to approach the crypto market with other kinds of more complex approaches, not for pure trading, but to leverage the internal dynamics of the market. So to, say, cash and carry, for example, one buys a crypto and sells the related future and gets a mathematically certain gain within a certain time horizon, facing a certain kind of risk that is more practical than real, but has to be considered, of course. However, you must do some research here. So I'd say, unless you really want to do cash and carry or other complex structures, which have to be properly studied though, and not improvised because your cousin's friend told you about it, if that's not what you're interested in, just leave futures alone. In my opinion, it is still better to stay with that naive and hopeful approach of catching the right crypto, buying it and holding it, and then winning the lottery jackpot. More or less, you'll lose the money you put into it. You need to be aware of that at all times. I mean, if you put 1,000 euros into the crypto market, whatever type it is, consider that 1,000 euros lost. And if it becomes 1 million, well, we'll be overjoyed for you. But start with the assumption that you can lose that 1,000 euros. Nothing will happen in your life if you lose that 1,000 euros. And this is important. It's like buying a lottery ticket for 1,000 euro, or many tickets for a total of 1,000 euro. It's clear And when the lottery is over, well, what's going to happen? You're going to throw them away if you didn't win. Well, the same thing applies to the crypto in some ways. Recommending crypto futures? Okay. But to do what? To do trading? If you want to trade, you'll have to have some kind of expertise. You can't improvise just for fun. You'll have to do the research first. There are many things that can be convenient, but you have to study first. You'll have to study well. And I assure you that it isn't a trivial subject. It's a very interesting topic that can fascinate many people, but you can't approach it with superficiality.
Wrapping up, Andrea, what are we talking about when we talk about the Unger method applied to systematic crypto trading? So let's end our talk with some so-called instructions for use.
Well, the Unger method is, as I've always said, a common sense method of developing trading systems and approaching the market. I do it numerically. And when I say numerically, you shouldn't be afraid and think, oh my gosh, now he's going to bring up NASA numbers. No. It's just a step-by-step method that plans what needs to be done. It verifies strategies based on the past trends to hypothesize how they may perform in the future, thus studying the market trends. And this is for both traditional systems and other forms of investment where there are edges to be discovered in favor of the investor. They must be evaluated and then schematized to build a plan. So the Unger method takes all the pieces, lines them up, and decides what needs to be done. It decides this before it puts money anywhere. When it invests, it already has everything clear about what must be done, let's say.
Let's close on this conversation with Andrea Unger, who has shared with us the correct spirit, the right one, the one suitable for investing in this very complex market. But it's a constantly evolving market, and I think that we can say that this will certainly not be the last of our conversations on this topic. Thank you and keep up the good work.
Thank you, and goodbye everyone.
Before we say goodbye, here's a last service announcement. For all the people who would like to delve deeper into the concepts that we have explored during our conversation, you can order Andrea Unger's book, The Unger Method, which is available on the Unger Academy website. You'll receive the book at your doorstep. It's free and you only have to cover the shipping costs. So happy reading, everybody.